There's a storm building in China's EV market, and at the center of it is NIO. After months of silence, the company just dropped a powerful quarterly report that's shaking up expectations. But here's the twist. Despite a record number of deliveries and a surge in revenue, the stock is still trading like it's stuck in reverse. Is this disconnect temporary, or are we staring at one of the most explosive setups in the market right now? That's exactly what we're breaking down today in full detail. Before we dive in, make sure to subscribe. These market shifts don't wait around, and neither should you. NIO delivered 42,094 vehicles in first quarter 2025, marking an impressive 40% year-over-year increase. That's not just a rebound, that's a full-blown growth surge. On the surface, this looks like a company firing on all cylinders. Revenue came in at approximately $1.66 billion, up 21.5% compared to the same quarter last year. Gross margins also improved significantly, climbing to 7.6% from just 4.9% in first quarter 2024. So, why is the stock still struggling to take off? The answer lies in the net loss. NIO reported a loss of nearly $930 million, deeper than many analysts expected. It also missed EPS estimates by about 10 cents, which spooked some investors. However, this kind of short-term panic often overlooks the full story, because what's coming next could completely change the trajectory. We're about to get into second quarter guidance, model launches, and why this summer could be the turning point for NIO. And you'll see why the market may have severely underestimated what's about to hit. NIO's second quarter delivery forecast is already raising eyebrows. The company is projecting between 72,000 and 75,000 deliveries, which includes about 26,000 in June alone. That would push quarterly revenue to around $2.7 billion, just shy of analyst consensus, but still a major jump sequentially. Now, combine that with their rapidly expanding lineup. The Firefly brand is targeting the budget-friendly EV space, while the premium Anvo L90 and L80 models are entering a critical phase of market expansion. These launches aren't just about offering new vehicles, they're about staking out strategic ground across multiple pricing segments in China. If NIO can deliver scale across that product mix, it could begin to challenge not just domestic competitors like BYD, but also position itself internationally. The main numbers support that narrative. NIO delivered 23,231 vehicles during the month, which represents a 13% increase year-over-year. While BYD has been slashing prices to maintain dominance, NIO has held pricing power more effectively, signaling that customers are willing to pay for higher-end electric experiences. That distinction matters, because in an environment where cost-cutting is rampant and margins are under pressure, NIO's ability to grow while preserving premium positioning gives it a significant long-term edge. Let's address the elephant in the room. China's EV sector is brutal. Competition is fierce, subsidies are constantly shifting, and price wars are the norm. But this chaos creates opportunity, and NIO is one of the few names with the infrastructure, the software ecosystem, and the product range to survive and potentially dominate. Battery swapping tech, in-house chips, full-stack autonomous driving. These aren't buzzwords, they are moats, and NIO has spent years building them while others race to scale. That foundation could become increasingly valuable if regulators tighten standards or push for innovation over pure volume. The annual general meeting on June 25th will be crucial. Investors are expecting updates on international expansion plans, factory ramp-ups, and delivery timelines for the newer models. If management can present a compelling roadmap backed by operational data, we could see sentiment shift sharply. Just a quick shout out to our sponsor, Moomoo Financial. If you're looking to start investing or expand your portfolio, Moomoo has an incredible offer just for you. When you open a brokerage account using the link in the description and deposit as little as $1, you'll get a chance to draw a free stock, and that stock could be worth up to $2,000. But that's just the beginning. If you make a net deposit of $100 or more, Moomoo will reward you with 5 free stocks, each potentially valued at up to $2,000. That's a huge opportunity to kickstart your investing journey with minimal effort. And if you're ready to go all in, depositing $1,000 or more unlocks an even bigger reward, 15 free stocks. That means you could be looking at a total value of up to $30,000 in free stocks just by getting started. This is one of the best deals out there for new investors, and it's a great way to explore the stock market with zero commission trading, advanced tools, and a user-friendly platform. So, don't miss out. Click the link in the description, sign up, and grab those free stocks while this offer lasts. Now, let's jump right back into the video. It's also worth watching how NIO addresses its widening net loss and capital burn. Will they prioritize market share, or will the company shift gears toward margin preservation and profitability? The tone of that meeting could determine the stock's short-term direction. Currently, NIO stock is trading at depressed levels despite rapid delivery growth. This is creating a divergence between fundamentals and market sentiment. Analysts remain divided. Some see a turnaround brewing, while others remain cautious due to the losses and geopolitical risk. But here's where savvy investors are starting to lean in. If the company hits its delivery targets, executes on its model expansion, and reins in costs, the upside potential from current levels could be massive. We've seen this story before in growth sectors. When execution aligns with market opportunity, lagging stocks don't stay lagging for long. Here's the bottom line. NIO is in a high-risk, high-reward phase. The first quarter financials showed sharp progress on growth and efficiency, but profitability remains a challenge. Yet the forward momentum, from delivery guidance to product launches to strategic moves coming at the AGM, points to a company preparing for a major run. If you're betting on EV adoption in China and looking for a company that has already built the foundation to lead in both tech and scale, NIO might be the pick. The path won't be smooth, but the potential payoff is what's drawing interest from long-term bulls. Now, the real question is, will the market wake up before the next surge or after? Let me know what you think down in the comments. Are you buying NIO at these levels, or do you think more pain is ahead? And make sure to subscribe so you never miss these deep dives that help you move ahead of the crowd.